4, 3, 2, 1. Hello, this is Dave, and welcome to Equities Story. I'm sorry a bit late. Me and Wolf have been talking about the markets and trying to, work out where these things are going to go. And so, after about 1 hour of looking at P ratios and looking at SP ratios and long-term historical analysis, we got no idea.
No, but we come to a conclusion.
We did come to a conclusion. I'm going to let you talk about that if you don't mind. So this is just general share advice and not personal advice. And I'm going to let Wolfie come to a conclusion about what we think is going to happen. I've got it's quite good. I've actually got
So I think, Dave, overall, of course, like you said, we've been talking about the markets, seeing the GDP numbers in America and we think, oh my God, that's pretty strong. But then we thought, okay, that's probably means more interest rate rises, more inflationary pressures and all that sort of stuff, which means markets are going down, right? That's pretty obvious right there. So if we think the markets are going down, the conclusion we've got is that obviously there's going to be a point in time where we're going to have an opportunity that we don't normally get on a regular basis. That is, one of those events where possibly we could be buying ourselves some really good, really great stocks, like a buy over lifetime, set ourselves up for the lifetime, right? So this is, I think, what the conclusion is. We're going to have some really good opportunities. We just got to be patient and pick the moments right. So what we're going to be probably looking at are those really good stories, not the trending smaller type stories, the really good, the GMGs of the world probably, and some other stuff, the Microsofts, and looking at long-term 3-5 years plus, where you're buying them on the long-term trends and setting yourself up, for that long-term growth. So that's the conclusion I think we're going to get out of this, is that we're going to see, because like you said, Dave, and you've been going through the charting with me, you can see it's breaking trend, you can see it's going lower. We discussed it, I can see it going lower too, because there's just so much negativity around the market. There's just zero positivity at all. And when you see that GDP number, yeah, it's good in one way, but obviously bad in another way, where that is much stronger than a good GDP number. So for me, those markets are going to be volatile. So we're going to use this as an opportunity for us.
Yeah, and we're sort of talking like on the ASX 200, which is supported by the BHPs and the Rios and the banks, where it holds a big part of that sector up. But we still see downside coming next month, and maybe the market will look to that sort of 6,500 level, 6,450 level, right?
Mm-hmm.
But the worry is here, Wolfie, is the small caps, which a lot we talk about, right? Which we know the small caps are nearly not far off being down by half, right, since 2022. But they could bottom a lot more. They could do 15% or even 20% next month.
Yep.
And why we're saying next month is that it's like all these issues in the world, inflation. I think the big issue is obviously what's going on in Israel with Hamas, and God forbid if Hezbollah get involved, which I think they're like 100 times more powerful than Hamas, right? So and then if Iran gets involved, there's a lot of issues to be really, 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 really concerned. But the general feeling is what we're looking at is, P ratios, average P evaluations of companies, let's talk about that, are a little bit higher than they are normally.
Mm-hmm.
The general feeling is that if it comes down, it will be a 1970s style opportunity, right? To get into some great long-term trends.
Yeah, I think even GFC type opportunity, right? Where we had a real big fall in the markets, almost depression type stuff, right, in the markets. And then you've got that incredible period of picking up some really, really great. Dave, I remember it vividly because I was there, right, for the moments, and I picking up ANZs, even though it's not a trending stock, even if it's it's not considered a growth story either. I remember picking up ANZ at the time, really on the GFC lows at $15 and below, in fact, 14 or $15. And I just lived off the dividends for the next 10 years, right? Just picking up the dividends. I've almost made my whole, returns on the back of slight ANZ move up to 20 to 25 bucks over the next 5 years, but the dividends were still bloody good. So there's the opportunities. I've been there, I've done it, I've seen it. So you're going to get, possibly, if that happens, you're going to have those opportunities to pick up those really good stories at some depressed prices where there's like just a complete fire sale, possibly.
Yeah, and I'm surprised. Listen, I know you're more longer term, but you know, you're only, what, at the moment we can talk about that. You're only sort of, I think you're 25% cash. Are you looking to get 50% cash, or?
It's growing. It's like a natural attrition at the moment, because obviously with every week that goes by, some stocks are now starting to drop below trend. So I've got to get out. But I'm harsh with it. I'm not going to hold any prisoners. And yeah, so it's probably gone. It's probably by next week, it's probably been over 30%. And if that happens, yeah, I'll be happy. 30% is still a pretty good, decent chunk of cash to decide. Some stories are still holding them very well. Still, the charts looks good. So there's no reason for me to really just abandon hope with everything, because there's always stocks that are holding on very well because they've got nothing to do with it. People are still going to do whatever they need to do. So look, I'm intrigued to see how it all goes. My cash pile is growing for sure. As an investor, that's exactly what you should be looking at having a bit of a cash pile in there, and then taking advantage of those opportunities if they happen, right? We might not have a GFC moment, but at least we might have some big falls in some stocks. We've already seen ResMed, right, being down to, it's a still great story, by the way, overall, and we'll talk about it in a moment because they come up with their quarterly, but it's fallen. It's now trending probably below the historical PE ratios, right? So there's the sort of opportunities I'm thinking about if I'm looking at the long term, if I'm a believer in that story. And of course, that's also the caveat, whether I'm a believer in the story long term.
It was quite interesting because the XTO has had a little bit of a bounce, but I suppose, like you say, that's largely helped by BHP Rio.
Exactly.
And everyone's sort of looking like iron ore back up to.
All you need is the iron ore to collapse, Dave, and we've got 6,000 points coming up.
Yeah, well, hopefully not. But yeah, I suppose really when you look at our market, iron ore is the major factor, isn't it? Because if it brings down BHP and Rio, the whole negativity then.
Then we're in trouble. Absolutely. I mean, we do have to probably count our lucky stars in some way. We'd not tech heavy, where the PE's ratios are out of the world. But we still got dangerous, where if iron ore collapses, then we are in trouble, because the Rios and BHPs and FMGs are very, very powerful on ASX.
Well, that's bad price action. I mean,
yeah, it is.
What happened last time we broke the 200, and we can go back to the GFC moment when the markets were having it was there because the markets were so bullish. It still went down a lot more.
Yep.
And then we were eventually we rose above it. We broke there. We broke below the 200 back in 2015, and the markets were hard going for a bloody year, weren't they? My gosh.
They were. It wasn't too bad. It wasn't a ridiculous movement, but it was just below trend, like treading water, wasn't it, for a little while?
Again, we broke the 200 then and decided to go lower. That was.
I think that's what I'm thinking is going to happen, right? I think that moment in time, the 2018, that could happen right there. So a short, sharp move backwards, and then we might have a recovery. So that's what I'm thinking could happen.
Yeah, somewhere around that 6-5. Well,
yeah.
All right, but it's very, very difficult, and it's really pointing that. Let's have a look at our market on the monthly, actually, Wolf.
Yeah, good idea.
Wow. Yeah, it's looking like it, isn't it? We're right coming up to the end of the month.
We don't normally go too far down below that, on the monthly, do we? But I think that 6,400, 500, I think is definitely doable.
It's not the end of the world. It's another 5%.
No, it certainly isn't.
Another 5%, but it's like you said, the bigger issues are maybe small caps, right? Where if you look at them, there's a lot of noise around here, noise around there. Yeah.
Nobody wants to know the small caps when markets collapse.
Well, they could do 15-20% pretty easily, right?
Very easily.
Right. And so the general feeling is, guys, the markets are going to go lower, and I think November is going to be an absolute horrible place, to be honest with you.
And I think we've seen enough evidence now that not even the decent reporting season's helping. No one cares.
Yeah. No, all right, Wolfie. So let's have a look at some stories. Let's have a look at SDR. Again, scratch your head. Strong announcement, but
very strong announcement. I mean, it's a ridiculously strong announcement. 30% growth. Still reiterating guidance, they're going to go cash flow positive by the end of this financial year. They're saying everything accelerating growth-wise, pretty much. And the market's going, no, sorry. I mean, come on. What else do you need, Dave? 30% growth, right? Accelerating growth, by the way, mind you. Better than 2019 levels, mind you, right? So before the GFC. And the market's still not happy. I mean, what do they need? It just shows. I think it's bots. I think it's the shorters are just really outnumbering the buyers out there at the moment. And understandably, the market's a very negative mood. So it's difficult to swim against the tide.
And again, ResMed, which just forgive me, I'm going to put this on a monthly
please, because obviously we're talking about a certain stocks that you could potentially have a little nibble on a monthly on certain trend lines. I know it's not the way CTM works, but like I said, sometimes you get an opportunity where you go, I think the market's just really
and look at that,
crazy.
It's not even holding support on the monthly right now.
Yeah, so I would not do it yet, because if we're doing on the monthly, I think we need to see it in the month, right, to see where it's at.
Yeah, which is about 3 days away.
Yeah,
right? So
and you might have a little bounce by then, so we just don't know.
But if it doesn't,
then you wait for another month and see where it's at, right?
Opportunity knocks, right?
Yeah, look, and this is why you got to be patient in this market. If it's not this month, wait for the next month. Let's see what happens. Because like I said, if November is bad, that 15 goes, hello, we could be in play, and that will be an amazing buying.
All right, we're gonna get CRN, so I'm gonna go back to the weekly for this.
Yeah,
and it's up today 2%. Now that's not a bad looking chart in the middle of a mayhem.
It isn't, and that's because of the underlying commodity prices. So all three. So I went through it because you asked me yesterday, can you go have a look at those coal stocks? Because why are they trading on 2 times, 3 times, 4 times? What are we missing here? Okay, so you sent me a task. I went and did it because I'm such a great employee, which I need more, obviously, higher wages, right? But that's another story. But I went like a good boy and went through them in pretty good detail yesterday afternoon. So I spent a number of hours actually looking for it. I did. So I went through WHC because that was the most fascinating one. And the reason why it's most fascinating was because they had this big acquisition. And I went through the books. I went through the previous last 2 years data that they produced. And I wanted to see whether this 2.5 times is actually a true reflection. And it is. There's no other one-offs. There's no other, manipulation in the actual reporting. It's actually real 2.5 times. That is the real P ratio of a story. But there is, of course, context to everything that we look at, right? Reason why it is trading at 2.5 times is because last financial year was extraordinary for coal. Remember, we had a really strong spike in coal prices, right? It quadrupled in price. So as a result, the coal prices was really extraordinarily high for a lot of these coal players. That's why the PE ratios looks bad. So the question is it a true reflection of these stories? No, it isn't, because really it will probably revert to the mean. We already seen some of these coal prices come down, and yesterday they come up with a quarterly WHC. So then I went obviously comparing it to what was happening previously, to what happened last year, to what is happening right now. So my conservative estimate on WHC, and I'll use this as an example, and I'll go to the SMRs and others in a sec, is that it will probably halve, right? So the realization coal prices, and I've got that here written down, they got $445 last year for their coal portfolio, right? The average prices realized. It's already down to about 220. So that's halving right now already, right? If that's the case, if we keep everything equal, and I'm looking at the WHO, I'm looking at Whitehaven's production profile right now, I'm looking at the outlook as well, and they're actually pretty steady, right? With costs, well, actually not pretty steady, they're actually going to increase production, right? With costs slightly going up as well, but they are the cheapest coal producer here in Australia we've got. So if I'm looking at the numbers, let's say that it halves, you're probably still looking at about a, 5 times PE, right? It's still looking very cheap overall with, say, a dividend of about 6 or 7%. So it's still looking extremely good in a normalish market, if you know what I mean. So, I mean, the question is then, what is the true value then on coal prices? Would you pay like 10 times, 12 times, 13 times for coal? Probably not. I think the market normally probably uses maybe 7 or 8 times. So I still think there's value in coal stories, right? As long as you've got that long-term view on coal prices, they're going to be higher. Remembering that WHC now will be 70-30% coking coal versus thermal coal, so which is nice. And the other extraordinary thing about Whitehaven Coal, Dave, was that it didn't have any debt and had $2.5 billion in cash on their books. It's just crazy, absolutely crazy. So Whitehaven's now become almost like my number one play, almost usurping. Well, it says usurping SMR in a way.
So is that after they paid for the BHP assets?
No. So they're going to be using part of the cash pile to pay for the BHP stuff, because the whole price for their portfolio they're going to be paying for BHP is about $3 billion US dollars, right? Which equates to almost 5 billion Australian dollars. So the 2.5 billion cash pile they've got is not going to be enough, but they can take on debt, right? It's good because they can probably pay it off in the next 2 or 3 years with this extraordinary performance they've been doing. So I've got no issues, and this is why I think this is a great acquisition, because if they were already indebted and they're trying to take on more debt with buying this BHP, it'd probably be very problematic, I'd say, especially with the interest rate rising. But I think because they're starting with a huge cash pile, much easier to sort of understand what's going on here. So I think Whitehaven, Dave, is becoming my number one play very quickly, very cheap, very good run company. And if you do believe like in coal to here stay much longer, and I think it will, especially metallurgical coal, which they've obviously now bought from BHP, then this is turning on the number one play. Simple.
Thank you very much, Wolf. That was great. And let's just talk about SMR, because they had a good announcement the other day.
So SMR, I'm looking at SMR, and again, it's cheap, right? It's trading on about 3 times PE. It's still very old company, much smaller than, so WHP will be the biggest. No, WHC will be the biggest now coal producer in Australia by far, by doubling by everyone else. SMR is still fairly small in comparison, but I like the acquisitions as well. They've done a good job. So it's still SMR, probably a good number 2 pick for me.
All right, absolutely brilliant, Wolf. And that's really because, I mean, there's definitely value in these stories.
Yeah, there is.
Now, just having a look at, again, car holding up really well, and that sort of price action in this market is excellent.
Yep.
And again, a good announcement. Harvey.
Yeah,
Norman,
very. I mean, Dave, I think again we're forgetting, and this is why the market just at the moment doesn't give a hoots, right? I was going to be the S word, but doesn't give hoots about what the actual reporting is like. Because if you look at the car sales update today, or at least some commentary, they are saying, I mean, the 3 biggest words I want to hear is strong, and they've got that in plethora, right, in that announcement. Yeah. Increasing margins, they've got that also in plethora in margins, and pretty much firing on all cylinders across all the verticals. What else can you ask for? This is a great company.
Brilliant. Harvey Norman, not as bad as what it could have been.
Yeah, it's a company going backward, but it's not as bad as it could have been. And let's go to buy it up.
All right, but not for us, not for Equities Story. SDF, we've talked about this company. It's a good one, and
I like it. I think that today's update was decent, growing in double digits. So trending probably more than long term. I still prefer AUB, but if it starts trending, you're probably buying it on the trend.
Now, Wolf, we saw Damstra get taken over, right?
Yeah, so yeah, absolutely. So let's talk about this one for a second, and we'll talk about this sector, right? So we talked about the smaller type tech stocks are probably right for the picking for some of their private equity, probably for someone that's cashed up, and it's obviously turned out to be absolutely the case. We've seen a number of small tech stocks being taken over, being nibbled at, and so on. So I said a few times, I'd say DTC, there's probably one of those that might be looked at. We saw that happen 2 days ago where someone came in and offered 30 cents. They of course it's still non-binding, of course, and it's just general indicative in nature, so that it's nothing in concrete, but at least someone's come in and said, well, we're going to offer you 30 cents if we have a look at your books and so on. Which brings us to the point again, what else is out there that's in the same sort of boat, which is a decent company that maybe is profitable, it's growing, it is very cheap. AIM today, Dave, came out with a pretty good report, really, talking about 10% growth. It's got a captioning product that's being used by Al Jazeera. They've won so many. They actually got some very nice product really there. And while maybe it's not like a ball-tearing 30% growth type company, someone will find value in this. Someone will probably pay up for this to take it private and maybe grow it with some acquisitions in there, because this is a decent company. It's actually producing some nice cash flows.
Absolutely brilliant. Wolfie, listen, that's great. I'm going to leave it there. There was more we were going to talk about, but we are going live in half an hour. So let me get the video out and
all right.
And looking forward to that, Wolfie. See you in half an hour.
All right. See you soon.
Bye.
Bye.